It's time for another video market update, and today we're going to spend just a few minutes talking about the Delta variant. So a couple of weeks ago, the Dow Jones closed down 725 points, and all of the headlines read, "Wall Street is spooked by the Delta variant." Yesterday, we were poised to have a good day in the market, but the Dow sharply declined towards the end of trading, ended up being down about 100 points. Not a big down day in the market, but we were poised to be a few hundred points up. Again, the headlines read, "Concern about COVID and the new Delta variant." So let's talk about the numbers. There's been 164 million people who have been fully vaccinated according to the CDC and NBC News. Of those, 99.923%, or in other words, 0.077 have had breakthrough cases, meaning they've been fully vaccinated and since have contracted COVID-19. Of those, 0.004% have been hospitalized and 0.001% have passed. So to put it in context, 164 million people have been fully vaccinated. 125,000 have tested positive for COVID since then. About 6,000 have been hospitalized and less than 1,500 have passed away. Now, while every death from COVID is tragic, the question you have to ask is, why would Wall Street be spooked by COVID-19 and the new Delta variant? Really, it's two reasons. The biggest one is the concern that governments will overreact. Governments will mandate lockdowns, which we've already heard talk about, that they're already going to start imposing mask mandates. And you've even seen large companies yesterday, Target, Walmart, and Costco all announced their employees are mandated to wear masks, no matter if they're vaccinated or not. And they highly encourage customers, whether vaccinated or not, to wear masks. As of now, it's kind of we would like you to, but we're not going to require it. Wall Street is looking to say, well, when do governments start reinstituting mask mandates? Are there going to be further lockdowns? That's issue and concern number one. Concern number two is that second quarter GDP growth came out. It was expected to be about 8.5%, massive. It ended up being about 6.5%, which under a normal circumstance would be amazing. But it was well under expectations. Why? Because the economy is not growing as fast, because there's still concerns with COVID. There's still the question of how much government benefits are keeping people from going and working, and how many people are staying home. So the big concern with the Delta variant for Wall Street, on top of mandated lockdowns and other things, is the government going to feel the impetus to spend more money? If they spend more money, it is not going to expand growth. It will probably contract growth. And that makes Wall Street nervous, because every dollar that continues to get spent, there's that worry of inflation, and Wall Street is certainly looking for that. So you'll hear a lot of headlines about Wall Street being spooked. Why we're going to see volatility in the next few months is because we always see volatility in August, September, October. That's when people have now come back into the office. That's when people are now focusing on their portfolio, and large companies are now back to trying to figure out where the arbitrage opportunities are. So when you hear about Wall Street being spooked by COVID, as of right now, there really shouldn't be any reason for that. Now, things can get worse, and we've seen things get worse. But as of right now, the numbers just don't suggest. If you're fully vaccinated, if you're not fully vaccinated, then the risk turns out to be much greater, and the spread is much greater. So those vaccinated and those not vaccinated can look at this differently. But ultimately, Wall Street has to look and say, between natural immunity, between vaccinations, and between herd immunity, these numbers bear out that the pandemic should not require lockdowns, but Wall Street is always on the lookout for government intervening. If you have any questions on this, let me know. If not, I hope you make it a great week.